Good afternoon, everybody. I want to thank you for taking a few minutes out of your day to learn a little about a fun strategy that can help you actually save a little bit of money on something that you're already doing. So, my name is Patrick Moore. I'm a certified financial planner, and I love working with business owners and kind of showing them a few new things that can help them save some money. But what I don't want to do is I don't want to like nickel and dime you and say, hey, it's a small one. You don't necessarily need to know about this. It is what it is, and kind of I'm really focused on doing some cool things that could amount to some substantial savings. Now, before we really get started, today we're going to focus on hiring and what you can do to save money while you're doing that. Now, a little bit of good housekeeping before we start. If I look over here, I'm looking at the chat. So if you do have any questions, I do love interacting because I used to do these in person, but once COVID happened, I started doing them online, and then I just never really stopped. So if you have any questions, feel free to send me a chat over here on the right. It might take me a second to get to it, but whether it's a public chat, private chat, or a Q&A, I'll be happy to answer. Now, the second piece of good housekeeping that we have is I do need to share my screen and show you is the disclosures. So today what we're going to be talking about is like general tax advice. I don't want you to take this as like a recommendation that you exactly should be doing this. Nothing about this is personal, right? It's general. I hope that it might apply, but you definitely will need to evaluate it with your own advisors once you learn a little bit more about it. Now, this program that I do monthly is called Schedule CE. And because I work with business owners, I really just want to put education out there to help them, really just to spread the word about things that may help them, whether it's save money, protect their business, or invest a little bit better. That's what Schedule CE is meant to do. Now, today, we're going to be talking about number one, okay, which is minimizing taxes. And so really, we're going to talk about minimizing taxes in the context of hiring, which I know everybody does. So before we get started, who am I? Like I mentioned, I'm a certified financial planner, one of about 5,000 or so under the age of 30. I live in Atlanta, Georgia. Been doing this for, about 6 years now. Had my own firm for 3 or so. And early on, I realized there was a disconnect because a lot of times there's an expectation that, the CPA knows everything or the advisor knows everything. And the advisor really doesn't talk about taxes and the CPA doesn't really talk about investments. And so I really like living between there, kind of trying to bridge that gap between what a traditional advisor and a CPA does to help clients. And that's because my goal is to help business owners achieve financial freedom. And you'll kind of see that it mirrors what I was talking about Schedule CE being. I think there's 3 steps to achieving financial freedom. That's keeping more of what you earn, protecting what you earn, and growing what you earn. And like I said, today we're going to talk about number 1. And the reason I put all this out there is I want you to understand where I'm coming from, okay? Because we're going to talk about one particular tax credit strategy, but obviously it's going to be colored by my opinions, by, my outlook on somebody's financial life. And that's really what I try and do for my clients. And that's what I want to share with you today. So we're going to talk about 3 things. The first is why you can get paid for hiring. Because I think that's question number 1. Is this a scam? Is this, real? Is it legal? Right? Number 2 is we're going to talk about how much you can get paid for hiring once we solve question number 1. And then we're going to talk about how the process involved once you determine if you can. So the first question we're going to talk about is, why does this exist? I think it's the most important one that I can answer for you today, okay? Because the way that you can kind of think of any tax strategy, I'm not going to talk about this one in particular right now, this is anything that you do, is that we have to identify why the government is allowing this to happen. And the way that I refer to this is you have to think about the behaviors and the incentives. What does the government want you to do? What are they incentivizing? Well, under this one, the work opportunity tax credit, they want you to hire people. It's as simple as that. Sometimes it may not it may not seem this way, but I promise you, Congress wants people to have jobs, not have jobs. Okay? So a program that they put in place is the work opportunity tax credit. It was added to the tax code in 96. And it reduces federal income tax dollar for dollar. It is a credit, not a deduction. At the end of the day, it's designed to help 2 people, okay? employers, and some target disadvantaged groups. So you think about it, they think that kind of the average run-of-the-mill US citizen might not really need help getting hired, but certain disadvantaged groups may. And we're actually going to talk about a third incentive here in just a second. So there's three incentives to this program. The first is the easiest. Congress wants you to hire people. There are classes of people who have trouble getting jobs. And Congress understands that it does help them for the employer to hire those people and give them a job. All right, no chat's coming in yet. I just want to check it real quick. So they want to reward that behavior and they want to help those people out. So if we're asking, is this legal? Yes. Does it make sense? I think so. Okay. So the question becomes, okay, it exists. Is it worth my time? Okay. And I think yes, probably. Sometimes, for a few people, maybe not. But the question becomes, okay, how much is the credit? Okay. So let's say you hire an employee from that target group. The credit will be a percentage of the wages you pay that person. You can't just hire somebody for a month and get $5,000 and move on. The way that it works is you actually have to pay the person. They have to work for you for a while. But if you hire somebody who's in one of the target groups, and we'll get to what those groups are in just a moment, the range of credit goes from $1,200 per person to $9,600 per person. So what you'll see is depending on what group that person belongs to, they may get a little bit less or they may get a little bit more. And the good part is there's no caps, no limits on the credit or the number of employees. It just has to be a new employee. So you can't go back in time. And if you have a bunch of credits past your income, which would be a nice problem to have, you can carry it forward for 20 years. So which employees are affected? I think there's probably a lot of people in their mind right now who are like, I probably don't hire any employees who are in these groups. The reality is that some of these groups are people who may be in there, but you would never, ever know, okay? Because they're just not going to tell you when you're hiring. And you never know somebody else's individual personal financial circumstances. Now, the first group that does qualify for the work opportunity tax credit are U.S. military veterans, okay? I think everybody would love to hire a veteran, but there are some additional qualifications that have to be met. So if it's a military veteran who's receiving SNAP benefits, they would qualify for $2,400 in credits. If it's somebody who's been unemployed for 4 weeks, $2,400 in credits. If they were disabled and recently discharged, $4,800 in credits. If they were unemployed for 6 months, $5,600 in credits. And if they were disabled and unemployed for 6 months, that's the biggest. That's that $9,600 credit. So that's one of those things I was talking about is people may not think some of their employees apply, but I bet most of the people on this call wouldn't mind hiring a veteran, somebody who's got good work ethic, somebody who, sacrificed for the country, and, Congress wants you to hire them. So that's what this program does. So that's section one. Veterans are kind of a little different, so I like to separate them and talk about them first. But there are others, okay? The first, which is close to that $9,600, is a $9,000 tax credit for a long-term temporary assistance for needy families program recipient. People who need, help for their families while they're out of work, whether that be, food, kind of other welfare benefits. That's option number one. Now, let's kind of go down the poll to some of these $2,400 credits. We're looking at SNAP recipients, short-term temporary assistance for needy family credits, Social Security recipients, people who live in what's called a distressed community, ex-felons, people who are in rehab or vocational rehab, long-term unemployeds, and there's a final one that is for people who get hired in the summer who are between the ages of 16 and 17. Now, every one of these qualifies at that same 40% rate. It just depends on which group they're in on the amount of credit you can get. And you'll see here, I put a box around the 2,400 over here on SNAP, TANF, and distressed communities. And the reason I did that is you may never know if somebody you hire qualifies for this. And if you don't ask, you'll never know and you'll miss out on that credit. So you think about it, right? If somebody's doing an interview with you, they're not going to be like, hey guys, I really need this job because I'm on SNAP benefits and I have been for a while and I really need the job. It's never going to come up, right? So that's why you can really do these forms anonymously, get them done, and have them sent off. So these are the target groups that qualify. I'm going to pause for a moment, see if we have any questions come in. Let's see. Nothing yet. And I should have mentioned, there's just use the chat bar to the right if you have any questions. But I think these are people that would get hired by most, maybe not most firms, but you might hire someone and never know it, like I'm saying. And the good part is if you hire somebody, they leave in a couple of years, you hire somebody new, they will also qualify for that credit. So it's every time there's a new employee. So I'm going to go ahead and move forward. So the question becomes, okay, how does it work? Well, I just mentioned it. First, it has to be a new hire. Congress wants new hires to benefit from this. They're not going to reward you for, you already having somebody on the books. So you can't go back and retroactively do this. It can't be your family, and 1099s don't count. They want people to have a W-2 relationship with the employer. Now, here's where it gets a little tricky, okay? And this is why I say it's important that you have this program in place before you do the hiring, because you have to request the employee provide the info on the day you give them an offer. So typically, what we do is we use an electronic link to get that sent out, but it's as easy as that. You can tell the employee it's all anonymous. It's just required for hiring. And the paperwork then gets sent to the State Department of Labor within 28 days. The state then certifies and verifies everything, and then the employee is determined if they qualify or not. Now, you determine if they qualified hiring, and then what happens is they have to work 400 hours for you in the first year to qualify. So obviously, you get paid on wages, but if somebody leaves you in a couple of weeks, you wouldn't get that tax credit, right? They really want somebody to stick and then actually qualify and stay with the company. And then what happens is you just basically submit like an annual, basically one additional form on your tax return, and then you get a tax credit. So it's pretty cool stuff. Now, I just wanted to go through an example like I did earlier, because let's say that, you hired Carl, okay, to be a salesperson. Unbeknownst to you, the owner, Carl's supporting his family with temporary assistance for needy families while out of work. Carl's never going to bring that up. He might be embarrassed, and it's just not something you're going to talk about, right? All he would have to do is when you extend the offer, he fills out a form, and it gets sent off to the State Department of Labor, and he gets certified or verified. And if you think about it, I mentioned there's actually a third incentive earlier, right? And that's because you think about it from the government standpoint, right? Do you think they would rather have Carl on temporary assistance for needy families, or do you think they'd rather make a one-time credit payment to the business and have him have a full-time job? Really, this is one of those programs where it's a win for the employer. They get a good employee. It's a win for the new employee. They get a new well-paying job or good-paying job, hopefully. And then third, it's a win for the government too, because they get to take that long-term payment off their books, give a one-time payment to the business, and that's that. So let's do this example. Let's say Carl gets paid $40,000, works 2,000 hours. The maximum credit of 40% on 40,000 is 16,000, but it's capped, and it's $2,400 of tax credits to Joanne in this example, just for doing something she was going to do anyway. Carl was already a great candidate. I don't think you necessarily want to go out of your way to do this and sacrifice the quality of your candidates, right? But if you're already hiring, they're a good candidate, and they fill out the form anonymously and you get a tax credit, why not? So let's do example 2. Say Joanne has 100 employees, 20% turnover every year, 20 new hires. Let's say 25% of those are eligible. That's 5 new hires. And the key is this is not a one-time program. It's every new employee moving forward. In this example, if she got 5 new hires at $2,400 a pop, that's about $12,000 a year, or $10,000 plus a year in Joanne's pocket for doing what she already did, right? So this is one of the things. A lot of times I have to tell people, you have to you make a small change to save a little bit more in taxes. Really, in this example, all you have to do is add one little form or one step to your hiring process, because you're already hiring, and get paid. So this is why I say this is a cumulative program, right? So if you're going to get $10,000 a year in tax savings because you do have turnover, over 5 years, that goes from a $10,000 decision to a $50,000 decision. And it would just keep going into the future. So these are ones that I love talking about. These are ones that add up over time, and they can really turn from, like I said, not nickel and dimes, not just a few pennies, a few nickels here and there. These could be real money over time. So I'm going to take a breath for just a moment. I know I've thrown a lot of information at you, but if you have any questions, if you want to share them in the chat, please go ahead, type them in. I'll send over, if you have like a private question you'd like to ask, I can share a 15-minute call appointment offer. So I will go ahead and do that. So if you actually want to chat, have some personal questions answered, there's no cost, no obligation. It's just, if you have questions on this or something else, I'm happy to help. Like I said, I'm trying to spread the good word and, see if anybody has any other questions. So it doesn't look like we have anything in the way of, I'm going to see if we have anything coming in. So no questions, no real chats yet. So hopefully that means I did a good job, right? But with that being said, I'm going to stop the recording, and I'm going to wish y'all a great rest of the day. And this recording will be available. If you need to rewatch, I'll have to, get it run through compliance, and then I'll get it sent out to you probably sometime in the next few days. So hope y'all have a great rest of the week, and talk soon.